Good morning, everyone, and welcome to the European crossover webinar. And we did get another new high in Bitcoin. Taking a look at the data that we have, we did get German IFO just come out, and 92.4, so a little bit better here. Looking at the euro, 2104, middle of the range in it. You can see here. Well, not really. Moving back toward the lower end, 2090 and 2140 was a high. And current conditions came in at 90.6, a little bit better than expected. 94.2 on expectations. We don't have anything until we come to the States, and it's going to be National Activity Index. Leading index at 10 a.m., and that's going to be it, along with, Dallas Fed Manufacturing. That'll be at 10:30 Eastern. Looking out ahead of at the rest of the week, into the next session. Well, not even that late. We'll get New Zealand retail sales. That'll be just after the U.S. equity markets close, or shortly after. Tomorrow we'll have UK employment data, Italian industrial orders, HICP final data out of the Eurozone. Monthly home prices in the U.S. states and Case-Shiller, that'll be tomorrow, along with consumer confidence, Richmond Fed, and GDP out of Germany a couple days from now. We do get GDP later on this week in the U.S. I'll be on Thursday. Personal consumption and spending on Friday. And Canadian producer prices on Friday, as well as University of Michigan final. And we'll go on and move into the take a look at Bitcoin. Bear with me. The chart here, the profile here is still the same one. I just changed the colors because it's easier to read than when it was a black background. Because these digits are not that pronounced. So against a black background, even when it was with a yellow, it made it difficult. This makes it a lot easier. Still the same chart. Let's go and take a look at Bitcoin. This thing just went, it's starting to pull back a little bit here. I thought we'd get it, maybe we'd make it up in here and then pair back, and then we still made another run. We came back here and then still made another run. Obviously, there was some talk about Elon Musk saying it's a little bit high, and he was saying, well, it's not much better than cash, but it is better. So just a bit of a mixed bag. But we are stretched. We talked about this last week. I thought, initially I thought on this run, we may have seen a quick spike. I think it was, on the initial run in here. 57 was one of the numbers. I thought it could be 53 or maybe it was 57, but then I thought it was going to go on and finally run out of gas here. Then it looked like it was going to run out of gas, so we pushed it higher. Then it looked like it might even go even higher. I still think we might get to 675 for spring, but I think this is a good area right here. When I first thought we'd get above 50, I thought we'd punch it and then maybe slide, or maybe we could extend a little bit further. So I had just a mixed bag of where I thought, well, maybe it might get to 53 and then come right back down, or maybe they'll make one kind of a burst up towards 57 and then tire out. But it has not played really how exactly I thought it was going to play out, because I thought once we got up here, we'd pop. And this surprised me that we weren't able to. Here, I thought we would have taken out 50 and maybe get to 53 and then tire. And I had already gotten out of my position some time ago around here, because I'd missed. That was my own fault. I'd missed, initially the first run, and I thought, well, if they make this run, they may not be able to sustain it, and I don't want to hang around. Really, it was my fault for missing that last pop. I guess it was back in here. I'm not sure exactly what it was. Yeah, I guess so. Yeah, here, and then we came all the way back down. I did not. Could have traded that a lot better, and did not. Although I still thought that we'd be able to get eventually to the low 50s and then 75 by spring. I did not trade this area real well. So when I got out in here, I said, I'm not going to leave myself suspect to the same thing happening. But this market has held up very, very well. And we did go on and push up in here. And this surprised me. I thought we would have spiked. Now I would thought we would have spiked up definitely to this 53. And we didn't. We slid right back down. We regathered ourselves. If you look at this on a further out like this, it almost looks like we could definitely pull back in here towards this 50. And then we might meander around and eventually pull back a little bit further. But it is overdone. But the one thing I can say, we're overdone. There's no doubt about that. But the market hasn't shown, other than just paring back a bit, it hasn't shown like as if it's going to come apart. Can't say that there's anything definitive. The first sign would be for now, immediately, to be to close below 54. And then as far as it could pull back to for immediate pull, would just be sub 50. You'd have to go like, there, which would be almost 48. This way, I think we would be able to pull back to. You might get a bounce in here, so we take out this low, but I think that this is where you'll see us pull back to. Actually, if you see this, it would come in close to where the trend line is. About by now, the trend line will be going like here, up to here, which would probably take us close to almost 50. But this is where you're going to see the most demand. You see that coming across just right above 48. But I think we could see the early signs of this trying to pull back. But it certainly looked like, the thing was that in here, you had a lot of the market was able to go on and, for lack of a better phrase, basically absorb from where we were at. Even though we had moved higher, the length of time that we stood in this area opened the door for us to push higher, which we did. But I think we're a bit stretched here. I think a lot of people are probably taking a little bit of taking some profit off the table, not flushing everything out. So I would look for a move back down towards 48 before we start to see a bigger reaction from there. I'm not saying we're going to get there immediately, but I think we can diddle daddle, come down here, maybe make another little peak in here. And it doesn't mean we couldn't make just another little peak, but I think before you see some true buying come in, it's going to be around 48. And then it's going to be interesting to see what the reaction will be at that point. Let's go and take a look at the news. Bitcoin continued gaining on Sunday, continuing a fresh high and extending a 2-month rally that took its market capitalization above 1 trillion on Friday. That would probably mark a good area right there. Then you see, once you get here, maybe that at that point the market says, okay, now let's pare back. The world's most popular cryptocurrency rose to a record 58,354, taking its weekly gain to around 20%. It has surged around 100% this year. Bitcoin gains have been fueled by evidence it's gaining acceptance among mainstream investors and companies such as Tesla, MasterCard, and BNY Mellon. Australia New Zealand dollars surf inflation wave and bonds left drowning. The Australian New Zealand dollars hit 3-year highs on Monday as optimism on global growth set a fire under commodity prices, while fears of faster inflation sent bond yields surging. The Aussie was up 78, having crossed 79 for the first time since 2018. The Kiwi dollar climbed to 73.07 and stretched to 73.38. One stage having finally cracked the January top. Broader support came from the latest spike in industrial commodity prices from copper to aluminum and nickel, as well as a break above the year-to-date high, exciting technically based traders. The same unrelenting strength of commodity prices as doubtless as a factor. The rise in prices in recent days has served to push our medium-term fair value for the Aussie up to 80 cents. At the same time, the tide of wagers on faster global inflation have hammered bond markets, with yields in Australia and New Zealand surging even more than for treasuries. Australian 10-year yields shot up 15 basis points, which, barring a brief spike in March last year, was the highest since 2019. That was well above the RBA's target of 10 basis points, and the central bank stepped in to buy a billion Aussie bonds to restrain the move in cash yields. The spread of Australian 10-year yields over treasuries widened out to almost 20 basis points from zero a couple of weeks ago. With growth prospects improving, central banks committed to maintaining stimulus and inflationary expectations back to more normal levels. Gradual net increases in bond prices can be expected, says Westpac chief economist Bill Evans. As a result, Westpac has raised its forecast for 10-year yields to 1.9% by the end of the year, up from 1.55, and to 2.5 by the end of 2022. Recovery bets dollar drives dollar to a fresh low. The US dollar was sold to multi-year lows against sterling and Australian New Zealand currencies on Monday as investors cheered vaccine progress and wagered on the pandemic recovery, bringing a global trade boom and expected windfall. The British pound hit 40.43, the highest since April 2018, as Boris Johnson charts a path of lockdowns on the back of rapid vaccines. The Aussie rose as much as 0.5% to an almost 3-year high of 79.08. Kiwi to 73.38. The euro was steady at 21.19, while the yen was the only major to cede ground to the greenback as the rising U.S. Treasury yields investment flows from Japan. And benchmark 10-year yields rose to 1.394. Their high since February 2020, and the dollar was up 0.2 to buy 573 yen. With local yields anchored by the Bank of Japan, the yen remains particularly sensitive to the U.S. bond market, which has dropped 2% this year, while U.S. 10-year yields have climbed nearly 50 basis points. Sovereign yields elsewhere in Asia have gained in tandem, or in the case of Australia and New Zealand, far in excess of U.S. rates, leaving little or no relative benefit for the dollar as investors begin to price in a pickup in global inflation. There's a tide of higher rates across the board, and whether the U.S. does have an extra basis points than Germany is neither here nor there, says Jason Wong. Well, I would maybe say it is here nor there against the euro, because the euro hasn't done crap. Seriously. I mean, the only thing worse than the dollar is the euro. I mean, If the euro were moving higher, that dollar would be, trading in the 88s with an 88 handle. So the euro hasn't, euro made an initial move, but look at the euro against against the Aussie and some of these other. Look at the euro against the pound, So look at the euro against the Kiwi, So the euro hasn't done anything as of late. If it had, the dollar would really be in much worse shape. The bigger picture. As the United States has got massive debt issuance for stimulus, and to find a buyer for the debt, you either need higher rates or a lower currency or both. And the momentum at the moment, we're getting both. Besides the huge budget deficit, a growing trade deficit also weighed on the dollar, as to having large gains, rising commodity prices have delivered to exporting currencies. Copper's gained nearly 8% for the year and hit a 9-year peak on Monday. Oil is gaining more than 22%. Yeah, here's my take on this thing with copper is, look, as long as that stimulus package is out there, you don't want to be standing in the way of this stuff. It just doesn't make any sense. I mean, let the stimulus package come out, then look at your reaction in copper. Don't be trying to predict tops. Believe me, I've been a pro at trying to pick tops, as in picking tops too early, looking for tops too soon. Let the market tell you. But honestly, it makes no sense to be looking for a top in copper if we still have the stimulus package. And if they do get 1.9 trillion, that's what's fueling a lot of this. And it looks like we're going to go that way. And these employment statistics, like the employment claims that we got on Thursday, really bodes that way. And to the point that, and Biden's been saying that, hey, go big, go big, go big. Well, basically, when these employment data come out weaker, if Republicans say, oh, we don't believe the really, not only the Democrats, but probably the majority of the countries basically going to say, for, not trying to be, crude, or we're basically going to say, you know, putting a finger to the Republicans and saying, we don't care what you want. We need this for the country. And I'm saying this is not only Democrats, but, other people in the country. So as long as you've got the stimulus in front of us and there's a potential for us to come close to that 1.9 trillion, you'd be crazy trying to say, oh, this is the high here, this is the top there. You see what I'm saying? Let the market dictate what it's going to be. Let us get to that area, and then let's see how we react. My guess is that either, if they do get it, either we would have a blow off, I mean, not a blow off at that moment, or either we'd be making a high. Until we actually get to that day, then you shouldn't be looking at it. I mean, we'll take a look at copper, but to step in front of this stuff now is just senseless. You just wait, and let's just see. And as we're about to, if they're about to make the decision on whatever that decision is going to be, whether it ends up being a disappointment or they come in, then we'll see how things go. But you have to figure, if they get 1.9 trillion, it's not only the stimulus money, but the money that goes into there and the amount of growth that will come back into the economy is going to be huge. So no wonder these markets are moving. Copper has gained roughly 8% for the year and hit a 9-year peak on Monday. Oil has gained more than 22%. Yeah, oil has been bananas. So we'll take a quick look at these. The Aussie dollar, which rose nearly 40% from last March's trough to the 2020s, added another 2% this year, while the Kiwi and Canadian dollar have added 1% or more. Analysts said the rallies might have further to run. We are recommending a long Aussie trade, said analysts at MUFG. The Aussies continue to benefit from the outperformance from the building optimism of global growth reflation outlook. The bank also recommends a long sterling position. This one's been another one that's really surprised me as far as this cable going. Head on Monday, Boris Johnson's outlined a roadmap of lockdowns, and that's it. So moving to the analysis. And Bitcoin opened the door for a little bit lower move. See, we are here. There we are. We haven't done much since what the heck? Oh, my stupid data went down. Hold on. There we go. Doggone. We did break lower here. So let's go on and oh, Ernest said thanks for the comments on Bitcoin. You know, we have seen and I don't know why my data wasn't showing up, but anyway, it is now. Um we're actually right in here. Damn, we have really come off quite a bit. Look at this. So going to the analysis. And here's a look at copper. You can see here, look, we even went even higher, you see? So it just doesn't make any sense trying to step in front of this thing anytime soon. Let's go move into the analysis here with the euro. So the euro closed the prior week mixed. Bulls need to secure a daily close above 21.59 to generate an up move. Bears need a daily close below 20.73 to kickstart the downside. The pair is neutral for now. And you can see where we're at right now. So we're still facing this 21.31. But in order for us to move much higher, we have to get above 21.59. We're stuck right now. If you're looking at this, you'd say, yeah, it's still the 21.31. But in order for this market to move on either side, you can see it's there and there. So we'll move back to 21.59. Cable has experienced a phenomenal run. The pair took a pause at a weekly wick at 40.32. To start the week, this will be the resistance with support at 30.19, which is a low on a weekly wick. So it's going to be 40.32. We've already made a run almost here to 40.50, but we'll still say 40.32, 39.19. The Aussie dollar took out stops to close the week. The immediate resistance will be a weekly level at 79.04, with resistance at 79, with a stretch to 79.33. Support will be 78.09. So 79.04, 78.09. Onto the Kiwi. These we're just looking at weekly charts. So the QE closed at its best level on Friday, opening a challenge above 73. Resistance will be 73.52/80. Will be the resistance zone of 73.52/80. Support will be 72.37. You see that? On to the dollar CAD. Same thing, looking at it on a weekly. The dollar CAD secured a weekly close below the critical 26.87. Immediate support is going to be 25.89 with a potential move to 25.28. Resistance will be 26.84. And on to the dollar peso. So the dollar peso is attempting to move higher after forming a base over the last 3 months. The pair needs 2 consecutive closes above the resistance of 20.62, which would target a move to 21.58. Support will be 20.23. Well, we already pressed up against 20.62 already. And that was our resistance. Let's take a look at the daily. You can see this wick right there, which would be 20.66. And you can see, obviously, we're getting that. We built that long bit, that good base here. So support at this point is going to be the high from here, which is going to be 20.39. It looks like we're going to continue to move away from that. And that would be the old high. The area that we had before, which is 20.45, basically 20.44. So it's going to be 20.44. We're pulling away from that. Onto the dollar yen. The dollar yen is seeing the 3 consecutive lower closes after targeting 620. Support to start the week will be 516 with resistance at 576. We're already right there. So 576 on the downside. And we'll press it up higher. And we'll keep the 540. So the dollar index remains weak. The index has managed to stay above 90 because the euro has been struggling. Support to start the week will be 89.90 with resistance at 90.91. And on to the cross rates. You can see the weekly chart. The Kiwi yen finished the prior week at new highs. Resistance will be the weekly level of 77.50. You can see that coming across here. Resistance will be the weekly level of 77.50 along with a weekly close of 77.83. Support will be 76.10. So 77.50 on the high side. Support 76.10. On to the euro pound. Well, this thing looks terrible. The euro pound closed at new lows on Friday. Immediate support will be 87.15 with a potential move to 86.81. Resistance will be 88.13. I think I'm at 86.15, not 87.15. Yeah, 86.15. Doggone it. Hang on. Yeah, because that's where we're at. That's 86.37. Let's see here. Let's screw this thing up because look, here's 85.95. So right here, which was right here at the support level, we're hugging on that, which is 86.37. And that's where we closed. And there's a weekly right there. There's the 86.15. Yeah, so that's at 86.15 with a potential to 85.95. Let's just go with the 86.15, which was the immediate. And resistance, which would be this high, just a high from there, 86.76. Euro odd. Euro odd broke hard in the prior week. The pair is heading toward the weekly base of 52.98, which will be support. Resistance will be 54.23. On to the Euro Kiwi. So the Euro Kiwi broke hard last week, taking out prior lows. The price has momentum to challenge 65.28, which will be support. Resistance will be 66.48. So 65.28. Look, the way these markets have been breaking down, I'm not even trying to go on and just giving you the lay of the land as we start the week, regardless if they seem like wider spreads. That's just the way this market's trading. On to the Aussie yen and these, once again, weekly charts. The Aussie yen took out some stops on Friday, climbing to weekly wick, which is 83.13. Resistance will be the weekly close of 83.39, with support at 82.22. And the guppy still pressing higher. Guppy rallied to the weekly close of 48.05 before pairing back. Resistance will be the weekly zone of 48.05/80. And you can see it's above that. So let's go with that. You see the zone here. So we'll allow it to press up to 48.80. We're supported 46.72, which is way down there, but. And lastly, we're starting on. Starting odd, saw a reversal on Friday, closing at lows for the week. Immediate support would be 77.39 with resistance at 79.12. And there's the bias chart. And just a quick look where gold is at. Coming off that low a little bit. Copper, as I said, still up here in the movement. Looks like we are showing a little bit of a, almost like a shooting star, you could almost say. It's been a heck of a run. And 10-year notes, they're still in bad shape. You take a look on a weekly, you can see as we've broken lower here. That's probably what's really pressing on indices right now. Bonds also weaker, which obviously rates higher. But that's where we stand now. Thanks for joining us here in the European Crossover webinar, and we'll see you in the chat room.